These companies are investing in research and development, which will accelerate growth. These healthcare stocks are likely to create millionaires for investors willing to buy and hold until 2030. Intuitive Surgical. The growth in demand for minimally invasive care globally will translate into robust growth in global Da Vinci system installations. AstraZeneca. A deep pipeline of new molecular entities with several potential blockbuster opportunities. Compass Therapeutics. A clinical stage company with a promising pipeline and a strong leadership team. Let's dive in. Here are the 3 healthcare stocks to make you the millionaire next door. October edition. Welcome to Timely Investment Research. During the pandemic era, several healthcare stocks skyrocketed. The focus was, however, on biopharma companies with an early mover advantage related to the vaccine against COVID-19. Sentiments have changed drastically in a post-pandemic era, with 2023 being a subdued year for healthcare stocks. However, there is no doubt about the point that global healthcare spending will continue to remain in an uptrend. Be it demographics or the threat of new disease outbreaks, healthcare companies will have a big addressable market. To put things into perspective, healthcare spending is likely to increase at a compound annual growth rate of 5.1% through 2030. By the end of the decade, the total healthcare spending will reach $6.8 trillion. Therefore, with several healthcare stocks trading at attractive valuations, it's a good time to consider some names for the next 5 years. Let's discuss the reasons to be bullish on these 3 healthcare stocks to buy. Number 1. Intuitive Surgical. Intuitive Surgical stock is among the millionaire maker healthcare stocks to buy. With higher focus on minimally invasive care in the US and globally, Intuitive Surgical is well positioned to benefit. It's worth noting that year-to-date, Intuitive Surgical stock has remained sideways. I see this as a good accumulation opportunity. An important point to note is that Intuitive continues to report positive business metrics even as the stock remains sideways. For second quarter 2023, Da Vinci procedures grew approximately 22% on a year-on-year basis. Further, the Da Vinci surgical system installed base increased to 8,042 systems as of second quarter 2023, which was higher by 13% on a year-on-year basis. Another growth trigger is the point that Intuitive has a globally addressable market. There is ample scope for penetration in emerging markets. With $7.3 billion in cash and equivalents, Intuitive has high financial flexibility for investment in R&D and expanding global presence. Number 2. AstraZeneca. AstraZeneca stock has been in a strong consolidation mode as of late. I believe that a forward price-earnings ratio of 18.5 is attractive, and AstraZeneca stock is poised for a strong breakout rally. Even from a long-term perspective, the company is a potential value creator. The first reason to be bullish on AstraZeneca is a strong pipeline. Currently, 172 projects are in the pipeline with 14 new molecular entities in the late stage. I must also add that the company believes that there are 10 potential blockbuster opportunities from 30 potential Phase 3 trials planned in 2023. Clearly, the growth outlook is robust, coupled with the visibility for cash flow upside. The growth story is supported by the fact that AstraZeneca has strong presence in emerging markets. An important point to note is that AstraZeneca is leveraging on the power of AI for drug development, manufacturing, and supply chain. This is likely to translate into earnings before interest, taxes, depreciation, and amortization margin expansion in the coming years. Number 3. Compass Therapeutics. Among penny healthcare stocks, Compass Therapeutics is worth considering. After a massive correction of 61% year-to-date, Compass Therapeutics stock looks deeply undervalued and is poised for a strong reversal rally. As an overview, Compass is a clinical-stage oncology-focused company that's developing antibody-based therapeutics. Of course, being in the clinical stage implies high risk. However, multi-bagger returns are likely if the company can enter the commercialization stage. The positive here is that Compass already has 2 molecular entities that are in the second phase of trials. The pipeline is attractive with a few other molecular entities in the preclinical and stage 1 phase of trials. The pipeline ensures that Compass will have an interesting 24 months. If the progress remains smooth, Compass Therapeutics stock can skyrocket. Another important consideration is the management. The leadership team consists of individuals from Pfizer, Bristol-Myers Squibb, among others. This adds to the credibility, and even with high risk, some exposure can be considered for multifold returns. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.